Well, let's welcome Deven Choksi, MD at DR Choksi FinServ, who joins us on the show. Hi, Deven. Good morning. Good to see you, and as always, let's focus on the top stock that everyone's discussing, both customers as well as shareholders, Interglobe Aviation. 20% down from the top. Still the market leader, still had some tailwinds as well. The street will be a little bit skittish how they wiggle their way out of this one, because there could be a penalty as well that could come about. That's the fear. Your view on the stock at around 4,900 rupees?
Yeah, Nigel, good morning. Well, I believe that I think there are not many moving parts at this point of time as far as I think the predicting the stock price is concerned and the likely impact onto the bottom line of the performance of the company is concerned. Last quarter hasn't been so good for the company. I think they reported losses. This quarter, I think this exceptional item, I think how much it will have a dent on the P&L is difficult to quantify at this point of time for us. But I believe that I think the worst is still possibly not over. I think the kind of structural changes that the government is forcing in, probably I think it may have a telling impact onto the operations of the company. Whether I think the main routes are basically I think altered. The key routes I think where the company is operating their sole operator I think they are not altered and I think they continue. So over there, they may end up, I think, charging slightly more premium prices. But on the main routes, possibly, I think with the 10% loss in share, I believe that I think it's going to be a little bit of a challenge that they might be facing. So let's see how exactly the revenue front, the costing front, or the cost front, I think is getting affected in this quarter. So as of now, no view. We would wait and see for some time.
Got that. Devin, thanks for joining us. Morning. Canes is the other one, right? Two stories, two stocks which you've seen was happening concurrently. One, of course, Indigo. The other was Canes. A sharp price drop. Yesterday, of course, came back some 13% by close. What do you make of this one?
Yeah, Prashant, good morning. Not too sure about, I think, what inspired buying, I think, for the buyer yesterday. However, the company has clarified that yes, I think there has been an error on the accounting front. I do not know, once again, I think what kind of impact it will have on a P&L side. We haven't interacted enough with them. But I believe that I think this is not going to be taken very easy. As such, I think the valuation wise, the stock is already commanding a premium. And in case I think the profit picture is missing for at least 1 or 2 quarters, possibly I think this premium valuation might get affected. And that's the key. I think one will have to wait and watch for some time, particularly because there is less amount of margin of safety at this point of time due to the premium valuations.
Okay, all right, got that. Devin, hi, morning. So never a dull moment when you're talking about quick commerce or these platform companies, right? Meesho is listing today. I don't know if you had a chance to take a closer look at the business. Give us your thoughts if you have any. And then the comment from the Blinkit CEO is very interesting. He was saying that this kind of cash raising, and Swiggy is raising cash, right? They're doing a QIP for 10,000 crores. So the Blinkit CEO said that this kind of fundraising may not be sustainable. Your thoughts? Meesho, Swiggy, Eternal itself, any of these companies?
Yes, Silvi, good morning. Particularly for Meesho, I guess I think the moat is missing. I think you have a tier two, tier three city model. At the same time, I think you are not a commission charging company. You are basically generating your revenue from the advertisement. And I think you're trying to create the space for yourself in this particular space of e-commerce. Not completely sure, I think, how exactly you can have a run rate continuing in this manner. Especially, I think the moat completely missing on that particular side is because I think the kind of brands also would be available on the platform. They are more affordable brands. So obviously, I think the class of customers that you're catering to are also coming from the smaller cities, etc. I don't see, I think, any immediate change in the business model happening for this company. And that's where probably I think I would be a little bit circumspect. Though the valuation wise compared to other companies, I think it may be slightly quoting at a cheaper valuation, particularly in price to sales ratio that we look at. But otherwise, I don't think that I think immediate amount is available. As far as the quick commerce is concerned, yes, I do agree that I think this kind of money which is being earned right now, right in this point of time, cannot be sustaining. And that's where probably I think one will have to be very mindful about investment into this kind of companies. Because I think the taking market share is one aspect, but I think running the operations on a profitable basis is the most important aspect. And that's what investors are going to be asking for. Today, I think at the market cap valuation that you see for these companies, I think they are richly priced. And today, I think if we have to even factor 8% yield into them, probably on market capitalization, probably I think you will be asking for a significantly large amount of profit production by these companies, which I don't see immediately happening at least in the next 3 years or so, given the business model that they have. I would rather wait. I think I'm not in hurry. I think as a consumer, you enjoy their services, but not as investors.